Hello and welcome to FinLit Top 10s. In today's video, we explore the book How I Invest My Money by Joshua Brown and Brian Portnoy, a fascinating collection of personal essays from leading financial advisors. Instead of abstract theories or one-size-fits-all formulas, these experts reveal how they actually manage their own money, blending numbers with values and strategy with emotion. The book's central message is clear. Money isn't just about maximizing returns. It's about aligning your finances with the life you want to live. Join us as we count down the top 10 takeaways from this unique and insightful guide. We begin our countdown at number 10. Money is personal, not just mathematical. Joshua Brown and Brian Portnoy open this collection with a powerful truth. Money is never just numbers on a spreadsheet. Even for seasoned financial advisors, the people we assume live and breathe math, their investment choices reflect their personal values, life experiences, and emotions. The essays in this book show that financial decisions are shaped as much by who we are as by what the market does. Some contributors invest conservatively because they grew up watching parents struggle during recessions. Others are willing to take more risk because they see money as a tool for possibility rather than just security. What unites them all is the recognition that behind every allocation or investment plan lies a human story. This challenges the myth that investing is purely rational. If it were, everyone would choose the mathematically optimal strategy and stick to it forever. Instead, even professionals admit their portfolios are designed to help them sleep at night, provide for family, or support causes they care about. The lesson here is liberating. There isn't one right way to invest. The best portfolio is the one that aligns with your priorities, tolerances, and vision of a meaningful life. Numbers matter, but they don't tell the whole story. You do. Coming in at number 9. Define enough for yourself. One of the strongest themes in how I invest my money is the idea of enough. Many of the advisors admit that when they were younger, they assumed the goal was simply to accumulate as much as possible. But over time, they realized that without boundaries, more is a race without a finish line, and chasing it only fuels stress. Defining enough creates clarity. For some, it means covering basic expenses with room left for comfort and joy. For others, it's about ensuring their kids' education is funded or that they can retire with dignity. Whatever the definition, knowing where the line is allows you to stop measuring yourself against others and focus on building a life that feels complete. The experts also emphasize that enough shifts with seasons of life. A single young professional may define it differently than a parent with dependents or a retiree seeking security. The important part is acknowledging the principle and making the definition explicit. Berger and Portnoy's contributors remind us that financial freedom isn't about reaching infinity, it's about reaching sufficiency. Once you know your version of enough, you can structure your portfolio, spending, and saving habits to reflect it. The lesson is simple but profound. Peace comes not from chasing endless growth, but from recognizing when you already have what you need to live meaningfully. At number 8, we see why simplicity often beats complexity. Despite their deep financial knowledge, many of the advisors in How I Invest My Money choose surprisingly simple investment strategies. Instead of complex hedge funds, exotic derivatives, or constant trading, they rely on straightforward tools like index funds, balanced portfolios, and steady contributions. Why? Because simplicity works, and it helps them stay disciplined. Several contributors note that complexity often leads to confusion, anxiety, and costly mistakes. When portfolios become too intricate, investors second-guess themselves, chase trends, or freeze during market downturns. By contrast, simple strategies are easier to understand, easier to stick with, and easier to align with long-term goals. One advisor even admits that while clients often expect sophisticated solutions, his personal money sits mostly in low-cost index funds. The lesson is clear. Knowledge doesn't always mean you should complicate things. True wisdom often lies in knowing what not to do. Simplicity also frees up emotional energy. Instead of stressing about whether you picked the right stock or fund, you can focus on living your life. That peace of mind is invaluable, especially during times of market turbulence. The big takeaway here is that simple doesn't mean naive. It means intentional. By keeping things straightforward, you improve the odds of staying the course. Because the best investment strategy is the one you can follow for decades, through good times and bad. Claiming the 7th spot, diversification reduces anxiety. One of the clearest patterns across the essays in How I Invest My Money is that nearly every advisor relies on diversification. Even though they come from different backgrounds and manage portfolios in different ways, they all spread their money across asset classes, stocks, bonds, real estate, and sometimes alternatives. The reason is simple. Diversification protects both wealth and peace of mind. When investments are concentrated in a single stock, sector, or idea, anxiety rises. Every headline feels like a threat, and every market swing can feel personal. By diversifying, these experts reduce the emotional highs and lows. Losses in one area are often balanced by stability in another, allowing them to stay focused on long-term goals. Several contributors admit they don't diversify just for mathematical reasons, but also for psychological ones. Having money spread out gives them the confidence to stick to their plan when markets become volatile. That confidence, in turn, prevents panic selling, the mistake that derails so many investors. Diversification is also about acknowledging humility. No one knows which asset will lead in the future, and spreading your bets is a way of respecting uncertainty. The takeaway is clear. Diversification isn't about chasing maximum returns, it's about building a portfolio you can hold through every season. By lowering risk and calming nerves, it allows compounding and discipline to do their work without interruption. Almost in the middle, at number 6, align money with life goals. One of the most striking lessons in How I Invest My Money is that the advisors don't see investing as an end in itself. Their portfolios are built around the lives they want to live. For some, that means ensuring stability for their children's education. For others, it's creating the flexibility to travel, support causes they care about, or simply spend more time with loved ones. This alignment transforms money from a source of stress into a tool for purpose. Instead of asking, "What investment will give me the highest return?" they ask, "What kind of life do I want this money to support?" That shift changes everything. How much risk to take, what assets to hold, and how long to invest. Several contributors reveal that they keep significant amounts in safe, low-return assets. On paper, this might not maximize wealth, but in practice, it ensures peace of mind and makes their broader goals sustainable. Others embrace more growth investments because they see money as a way to fund long-term dreams. The key insight is that money decisions don't exist in a vacuum. They sit inside a bigger story about family, legacy, and meaning. When your portfolio reflects your life goals, investing feels less like a grind and more like a partnership with your future self. Halfway through our list, at number 5, emotions drive decisions. One of the most revealing aspects of How I Invest My Money is how openly the advisors admit to being influenced by feelings. Even the most seasoned professionals, people who manage money and guide clients daily, confess that their own choices are shaped by fear and personal history. This honesty highlights a truth we often ignore. Money is emotional. Several contributors share that they invest conservatively because they watch their families struggle during downturns, and now security matters more than chasing returns. Others lean into riskier investments because they view money as a tool for possibility, not just protection. Neither approach is inherently right or wrong. It simply reflects the investor's emotional wiring. Brown and Portnoy's collection makes it clear that ignoring emotions doesn't make them disappear. In fact, unacknowledged feelings often cause the worst mistakes, like panic selling during a crash or chasing speculative bubbles out of greed. By recognizing emotions as part of the process, these experts can design strategies that work with their psychology instead of against it. The lesson is simple but profound. A financial plan must fit both the math and the mind. A portfolio that looks optimal on paper but keeps you awake at night isn't sustainable. Better to choose a strategy you can live with and stick to than one that collapses under emotional strain. Sliding into number 4, patience is the real superpower. A theme echoed throughout how I invest my money is that wealth building isn't about being the smartest person in the room, it's about being the most patient. Joshua Brown and Brian Portnoy's contributors stress that while strategies and asset allocations vary, what really matters is the ability to stay invested over the long haul, ignoring the noise of short-term market swings. Patience allows compounding to work its magic. Several advisors admit that some of their best decisions were actually moments when they did nothing, when they resisted the urge to sell during downturns or chase trends during booms. By simply holding steady, their portfolios were able to recover, grow, and deliver results that constant tinkering would have undermined. The essays also highlight how patience requires discipline in other areas, living within your means, sticking to a plan, and resisting the cultural pressure to get rich quick. It's easy to say, think long term, but the discipline comes from practicing it, month after month, year after year. The key takeaway is that investing isn't a sprint, it's a lifelong marathon. Markets will rise and fall, but those who stay patient, those who focus on decades instead of days, are the ones who ultimately reach their goals. Patience isn't passive, it's active trust in your plan. And for these financial experts, it's the single trait that separates success from regret. Opening the leaderboard at number 3, balancing security and growth. A powerful lesson from how I invest my money is that every portfolio reflects a delicate balance between risk and safety. Joshua Brown and Brian Portnoy's contributors explain that investing isn't about choosing one extreme or the other. It's about blending both in a way that matches your life stage, responsibilities, and temperament. Some advisors lean heavily toward growth assets like stocks, knowing that long-term compounding is their best chance to build wealth. But even they acknowledge the importance of holding cash or bonds for stability. Others prefer a more conservative mix, prioritizing predictable income or capital preservation. In both cases, the balance reflects personal comfort and the need to sleep at night. The key insight is that this balance is fluid. A young professional with decades ahead may lean toward aggressive growth, while a retiree will likely prioritize stability. The right answer changes over time, but the principle stays the same. Growth fuels wealth, security preserves it. The experts also remind us that tilting too far in either direction can undermine progress. Too much risk and you panic when markets fall. Too much caution and your money never outpaces inflation. The takeaway is clear. Successful investing isn't about eliminating risk, it's about calibrating it. Find the mix that lets you grow with confidence while ensuring your foundation feels secure. Our silver medalist at number 2, Your Money Story Shapes You. One of the most human themes in how I invest my money is the idea that each of us carries a money story. Joshua Brown and Brian Portnoy's contributors reveal how their childhoods, family experiences, and early encounters with money continue to influence the way they save and invest today. For some, growing up in financial instability led to portfolios built on caution and security. They prefer conservative strategies, not because the math demands it, but because safety is emotionally priceless. Others who saw opportunity in entrepreneurship or wealth creation lean toward growth-oriented investments, guided by optimism and a higher tolerance for risk. The book highlights that no one comes to investing as a blank slate. We all bring biases, fears, and aspirations that shape our approach. Acknowledging these influences doesn't weaken your plan, it strengthens it. By understanding your own money story, you can build a strategy that works with your tendencies instead of fighting them. The experts emphasize that reflecting on your story helps you avoid blind spots. If you know you're naturally risk-averse, you can set safeguards against being too cautious. If you lean toward risk-taking, you can build systems to protect against overconfidence. The key lesson is that self-awareness is a financial skill. Your money story may explain your instincts, but it doesn't have to dictate your destiny. Once you know where your habits come from, you can design a plan that truly serves your future. And finally, at number 1, the ultimate lesson. Wealth is freedom, not just riches. The most powerful message in how I invest my money is that true wealth isn't about the biggest portfolio or the flashiest lifestyle. It's about freedom. Joshua Brown and Brian Portnoy's contributors consistently return to this theme. Money matters because it gives you choices, not because it defines your worth. For some advisors, freedom means being able to spend more time with family or walk away from a job they no longer enjoy. For others, it's the flexibility to pursue passion projects, travel the world, or support causes they care deeply about. What unites all of them is the recognition that money is a tool, not the goal itself. This perspective reframes financial success. Riches can trap you in cycles of comparison and endless striving. Freedom, on the other hand, creates space for meaning and alignment with your values. It's not about how much you have, but about how effectively your resources buy back your time, your options, and your peace of mind. The advisors in this book remind us that every dollar should serve a purpose, whether security, growth, or joy. When money is aligned with freedom, it becomes fuel for the life you want, rather than a source of stress. The final takeaway is simple but profound. Wealth is not about being rich, it's about being free. Thank you for staying with us on this tour of How I Invest My Money by Joshua Brown and Brian Portnoy. This book is a reminder that money is not just about charts, formulas, or predictions. It is about people. Every contributor shares a personal story that reveals how their background, values, and emotions shape the way they save and invest. These stories show that there is no single perfect strategy. What matters is building a plan you can live with, one that matches who you are and the life you want. The lessons we've counted down highlight this truth. Money can provide security, give you confidence during uncertain times, and most importantly, create freedom. But the experts remind us that freedom is defined differently for everyone. For some, it's time with family, for others, it's travel, or the chance to support a cause they believe in. Whatever form it takes, true wealth is about choices, not just numbers. We hope this video has encouraged you to reflect on your own money story. Think about the experiences that shaped your view of money, and consider whether your current financial decisions align with the life you want to live. If you enjoyed this breakdown, please subscribe to FinLit Top 10s for more explorations of books that shape the way we think about money and financial freedom. Like this video, share it with a friend, and let us know in the comments what freedom means to you. Until next time, keep learning, keep growing, and keep building a richer life. Cheers.